Good morning, it's Steve O'Hare from Signal Centre. Today is Wednesday, the 27th of October, and it's our weekly review of the energy markets. We're going to look at crude oil, WTI, and Brent. Also look at natural gas, which has had a big uplift in the last few days. So let's start off with crude oil, WTI crude oil. The weekly chart, we're going to run through the time frames, give you an idea of the full colour of the technical analysis behind the charts at the moment. I still feel we're in a fifth and final wave of an impulsive move from the lows way back in early April 2020. We've stalled just in front of the 78.6% fib, and the weekly candle is forming a negative candle. We're only Wednesday at the moment, so there's still plenty of time for this to turn around. But price action is slowing down. We expect the fifth wave to be shorter than the third wave, and we are targeting this level of resistance around the 78.6% Fibonacci retracement level, comes in at 87.90. On the daily chart, we formed a shooting star on Monday. Yesterday's price action was a lot more bullish, but we are seeing price action moving higher. So we're seeing bearish divergence, price action moving higher, volumes moving lower, and momentum is also stalling with this. Let's get the momentum indicator up. I'll use the MACD. You can see that momentum is stalling, moving lower, as we are moving higher price action. So that is bearish divergence. So that's a warning sign that we are due a correction, or there will be a correction coming soon. The 4-hour chart has the bullish channel. We've highlighted this for a fair few weeks now. And it's supported also by the 4-hour Ichimoku cloud, a really decent indication there. As we can see, again, the MACD, price is moving higher, momentum moving lower, so potential for a stall, but at the moment we're sitting at quite elevated levels. Really sort of support coming up around about the 82.60 level. We're trading 83.07 on WTI at the moment, 82.60 initial support, and also down at 82 the figure. But the real level of support is around about the 80.60 to $81 level. This area where we've reacted from on a number of occasions going back into October. Let's take a look at Brent crude oil. Similar sort of price action. The weekly chart, however, we still haven't cleared the October 2018 swing high. So that comes in at 86.62. We're trading 84.66 at the moment. Again, price action has rejected. Last week we posted a hanging man type candle, which is negative, and price action has also rejected them that move higher earlier in the earlier part of this week. So looks to be an opportunity really for a stall and a correction lower. On the daily chart, we're seeing similar sort of signs, bearish divergence, price action moving higher with momentum stalling at these heady heights. So really have to consider this channel on the 4-hour chart, the Ichimoku cloud. We've got all inventories out later, and we saw API data recorded an inventory build of 2.3 million barrels, which was close to expectations. That's why we saw price action move a bit lower yesterday. The upward trending support line, or the channel line, is a bit cleaner on the Brent, and we really would be looking for a break of 84.30, and then 82.70 really would be the next support. So a clear break of 84.30, 84.28, 4.30. A close below there on the 4-hour basis would also be negative. Taking a look at natural gas, we've seen quite a lift. If we look at the weekly chart, this was showing signs of topping out around about the 38% Fibonacci retracement level, so quite a normal level for price action to stall at on a corrective basis. Saw some shooting star candles, and a negative candle the following week, and even another one. So 3 weeks we saw this rejection of the 38.2% fib and the move lower. However, over the weekend we've seen Russia using natural gas as a bit of a threat, bit of a weapon, and we saw an uplift. We saw a 23.5% uplift over about 3 or 4 days. So that is pretty. Let's show it on the daily chart a little bit more clearer. So yeah, the 19th of October to the high of the 26th of October, 7 days, 5 bars of price action, a 23.5% uplift, and we've retraced from them heights, and we can see we had this previous trend line which it stalled at. We formed a evening doji star formation at the top here. That was a good indication to get short, and it really played out really nicely. Momentum obviously breaking down. Still bullish overall, and you can see the gap in the charts around about this 558 level. So we expect to see decent support down there before we even contemplate another assault on the highs. 624 really the level to watch there. Okay, thanks for joining me this week. I hope you've enjoyed it. I hope it's been informative, and look forward to seeing you again next week.